Hey, Wall Street, how you doing?
Hey, what's going on?
I have a question for you about stocks and penny stocks and how long to hold on to stocks for.
Okay.
So my first question is, I bought a stock in PCG, which is PG&E. It's a gas and electric company, and I wanted to know how long I should hold on to that stock for. How do I know? And I just bought one stock.
This call and your telephone number will be monitored and recorded.
I just bought one stock because I wanted to learn about how this works. So, whether it's one stock or 100, I'm assuming the theory is pretty much the same. Am I correct to assume that?
No.
Oh, okay. Why is it different?
So when people buy stocks, the first thing you need to understand is what's your reason for purchasing the stock in the first place? Are you purchasing stock for long-term investment, short-term investment? Like what's your reason for purchasing the stock? And then when you buy it, when are you going to sell it? And so the biggest mistake that people make when buying stocks is they never have an exit strategy, right? Most people buy, but they don't know when to sell it or why they should be selling it. So that's first and foremost. When you buy one share of a stock, emotionally, it's going to be very different for you if you buy 1,000 shares of a stock because there's more at stake. And so the more is at stake, the more emotionally you become about it, that dictates whether you buy or whether you're selling it. So I don't recommend people buy one share. One share doesn't do anything. The way my system operates is that we buy shares in bulk. We buy shares by the thousands or more, and if you just can't buy 1,000, and you want to buy them in hundreds. And the reason you want to do that because it gives you a strategy to play when you purchase. So, for example, if you I think I did a video about the energy company NE. NE is the ticker symbol. And the stock today closed at 18 cents. So if you buy 1,000 shares at 18 cents, right, for $1,800. Every time the stock price rises 10 cents, you're gonna make $100. Okay, so the stock go to 28 cents, you gotta make $100. So if the strategy is to say, right, I want to make a couple $100 because I know this is a penny stock, but the stock grows, right? The stock ain't gonna go back up to $1, so I'm not looking for that. But I'm looking to make a couple $100 on the stock, and the stock goes back up to 28 cents or 38 cents. You can sell it, okay, and get out of the way. Excuse me, I have my math wrong. If you buy,
you have 60 seconds remaining.
If you buy 1,000 shares, it's going to be $180. I think I said $1,800.
Yeah.
If you buy 10,000 shares, it'll be $1,800, and every time the stock price rises 10 cents, you'll make $1,000. You see? So
yeah.
So if you own the stock and you say, well, I'm only looking for the stock to jump up 10 cents, that's your strategy there. So when the stock jumps 10 cents, you sell it. So when you say, how do I know when to sell it, it's based on the strategies that you have going into it. Does that make sense?
Yeah. Yeah, it makes perfect sense. Okay.
I'll call right back.
Okay.
So go ahead.
So you were doing the math around buying whether it's 10,000 either 1,000 or 100 shares in the example that you were using.
So the math works like this. So, for example, and we'll use NE for today.
Okay.
So NE closed today at 18 cents. because the Dow was down 500 points. And so the market sell off, and he fell at 18 cents. So if you bought 1,000 shares at 18 cents, it will cost you $180. Okay? Every time the stock price rises 10 cents, you're going to make $100. Okay?
Right.
If you buy 10,000 shares of NE, it's going to cost you $1,800. And every time the stock price rises 10 cents, you're going to make $1,000. Okay?
Right.
So your strategy is, if you say, okay, I'm going to buy 10,000 shares at 18 cents, and I'm going to spend $1,800, and you say, if the stock price rises up 5 cents, I just made $500, I'm going to sell it and get out of the way. That's a strategy. So when you ask how do you know when to sell it, it's based on the strategies that you got going in. If you know you got 10,000 shares and you know that you're making $500, you know that you're making $1,000 every 10-cent hike, and the stock goes back up to 24, 25 cents, that's $500, $600, $700, $800 that you're making. And it may do that in a week. It may do that in a couple of days. It may do that in 2 weeks because the stock is volatile. The stock is moving. So you're not buying this stock to hold on to it for dear life and watch it rise, rise, rise. Your strategy is you're just taking money off the table. You're realizing the gains of these companies. So when people are buying into these penny stocks, right, you're first, because penny stocks are crap companies, right? Many of them are just crap companies, and they don't have all of the financial information about the companies are not known. Some of the companies, these sham companies, these shell companies, or whatever the case may be. But if you find a company that was solid, that once traded at $1 or higher and now is lower for reasons that you can quantify, then you say, okay, here's a company like NE, Party City, Global Star, GSAT is that ticker symbol, which is down. They closed down today at 28 cents. So if you got these companies that can move 3, 4, 5, 6, 7 cents, 10, 15 cents, the strategy is when those stocks rise, though, that amount, you sell it because you're taking money off the table. You're not looking for no huge gain. And if you got it at 18 cents and you say, well, you know what, I'm only willing to lose, I bought 10,000 shares of NE at 18 cents, I'm only willing to lose $300 of my money. So if the stock price fall down to 15 cents, that's your $3 loss. That's your $300 loss. You sell it. Take them out. You take that loss and you go on to something else. So if you're going to be people be investing in the stock market, you have to be willing to lose money. No one is going to make money always and just keep on going. There are losses to come in stocks. That's the name of the game, right? I'm not trying to lose any money, but I know I'm going to lose money. So we mitigate our exposure to that. And how you mitigate your exposure to losses, in my view, is by knowing when you're going to take them. When you
having a strategy.
That's right. That means there's an expectation, so you're not blindsided by the loss. So when you first buy the stock, if you go into buying the stock, understanding that you're going to have to lose money, that's a possibility that you may lose money somewhere in this purchase. That means that when you go in and you make the purchase, that you may know that may come. So then what it does is it gives you a strategy to purchase. It gives you a strategy to sell. Whether that's being I may have to lose a couple $100 or I'm gonna make a couple $100. And every time you make a purchase in the stock market, you should go into it with these strategies. What am I willing to lose? How much am I trying to make? When am I going to sell it, and stick to those strategies? So that's the name of the game. So buying 1 share, 3 shares, that doesn't do you any good. So, people say, well, I'm trying to learn how to do it. You can't learn nothing buying no 1 share. What the hell 1 share going to teach you? They ain't going to teach you nothing. So if you want to learn, then you say, okay, it's 18 cents. I can buy 1,000 shares for $180. $180 is not a lot of money, but that's a lot of shares, though. That's 1,000 of them, which means that You only spend $180. If the stock price rises 3 cents, you just made $30. But you only spent $180. So by comparison, so when you say you want to learn something, that strategy there teaches you how to go in and buy, teaches you how to go in and sell. It teaches you how to use the components on the computer about the buying and selling. It gives you some insight on how to research, and you're only playing with $180. That's a better strategy in my view, in my 1 or 2 shares, when even if the stock price go up, you don't make no money. There's nothing to be made. So
right. Well,
you
might only make $1.
Yeah, yeah. Well, if you only want to make $1, then just give me the $180 and let me hold on to it, and I'll give you back $182, and there you go. Right? I mean, if that's all you want, yes, it's very easy to do. I'll do that all. You can do that all day with people, right? So no, you ain't trying to just make $1 or $2. If you're gonna play, then you want to position yourself to be able to make something while also having some caution. You know what I mean? You want to also have some caution because you're learning. So if you're not willing to risk a couple $100 to learn, then you probably shouldn't be trading. I mean, because you got to be realistic. You got to be realistic, and you got to remain as much as reality as possible as you can about this stuff as you're teaching yourself how to play in the stock market. It's not some fraudulent game that people think everything's against you and it's only right for the big boys. That's all nonsense, right? You can play and invest just effectively as someone who had tens of millions of dollars versus someone who only had a couple $100. So, it's the same.
This call and your telephone number will be monitored and recorded.
And I honestly believe that to be the case. So, does that give you a little bit of clarity about it?
Oh, for sure. For sure. It definitely gives me clarity. And it also, I think it might, would you suggest that same strategy for someone who wanted to teach their kids, like maybe they're 11-year-old, how to trade in the stock market?
Yeah, same strategy. Look, same strategy. A 40-year-old who don't know nothing about stocks is just like an 11-year-old. They the same age as it relates to the investment. You don't even want them to know nothing. So, hell, the 11-year-old might catch on more than you because they fascinated about all the numbers and stuff that's moving. You know what I mean? So that strategy helps get people to understand how things work. And it also fosters you to ask more questions. It also fosters you to get a little more engaged. And it shows you that you can take a little bit of money and you can build on that to get yourself up comfortable enough to when you do have thousands of dollars or tens of thousands of dollars, right? People having their retirements and different things, and you start playing with, and you start investing into more known name brand companies like the airlines or tech stocks or whatever the case may be. You can have the confidence to know that you can play with these companies. And truth be told, those companies are a lot more predictable than the smaller companies because there's a lot more information about them, right? They're more in the news, right? They're easy to follow. They're easy to research. So, the notion that people have that, say, well, stocks are kind of hard. Well, they're really not. You just don't know where to look for and how to research. And so what I do is I teach people a very simplistic way of viewing the overall stock market, and then how to make it your own. How to take this stuff and make it what you want it to be, formulate your own strategies, make your own moves. And I do the same thing with buying penny stocks. Is it a risk? People say, oh, it's risky. Yeah, it's a risk. Hell, it ain't no more risk than you doing real estate or you going to work every day. It ain't no more risk than you buying, anything that you do, right? It's all has some sort of risk, but you mitigate those risks when you educate yourself. And that's the name of the game, educate yourself, right? You ain't trying to be a stockbroker or trying to make millions of dollars in the stock market. Some people are, many people aren't. They're just trying to support themselves and do the things they want to do in their life. And you can do that by investing into penny stocks or, other types of companies. So it's fun, it's easy, and it's a lot more efficient than people believe it to be. Trust me. If it wasn't, I couldn't learn what I've learned from prison. Like, if that was the case, I mean, it just wouldn't have happened. I'm at a total disadvantage. So if I can kind of get this stuff, you guys in the streets are like way ahead of me as it relates to, you know, having the opportunity and the research to be able to do it and all that other kind of stuff. So, yeah.
You're a true inspiration. Yes. Thank you, Wall Street. You are an inspiration.
Well,
Thank you.
I appreciate that. Okay.